Rule 1. Money is a business, not a prize. Rule 2. Never outsource your judgment. Rule 3. Practice losing money safely before real stakes show up. That's the 3 rules hook for a very specific problem: how not to torch a giant inheritance. Show your support by liking, subscribing, and commenting. I'd appreciate it. So, picture this: an invite-only retreat where wealthy kids get a crash course in reality. No trust fund flexing, no Lambos, simulations, role plays, hard conversations. Why does this exist? Because wealth is fragile. Data shows big money often evaporates by the 3rd generation, not from a single bad trade, but from 1,000 small, unchecked decisions. Inside the retreat, day 1 is mindset. If you treat a windfall like a trophy, you'll spend it. If you treat it like an operating company, you'll manage it. What different asset classes actually do. How taxes quietly eat returns. Why a 6% average isn't 6% every year. Then it gets real. Public markets, a tiny slice of alternatives. A fat line item for cash you'll need sooner than you think. Market drop, a friend's can't-miss startup. A rental that needs a roof. A cousin asking for a loan. You have to decide in writing, with a rationale. Later, you see the consequences. Relationships are a whole module. How do you say no without nuking Thanksgiving? Scripts, boundaries, cooling off periods for money asks. Family governance sounds stiff, but it's just agreements. Who can sign? Who decides? How to push pause when emotions spike. There's a legal reality check too. Trusts, trustees, how power of attorney actually works. Prenups, less romance, more risk management. Reputation drills, social posts that seem harmless but signal predators that you're a target. You learn to move quiet. Philanthropy isn't an afterthought. Give with guardrails. Measure outcomes. Avoid turning charity into a vanity project, because purpose without process can burn cash just as fast as a bad investment. Mentors show failure stories on purpose. The point isn't fear, it's repetition. You practice losing small so you don't lose big. Back to the 3 rules. Money is a business. Build a simple dashboard. Income, outflow, liquidity, risk. Review it monthly. Don't outsource judgment. Hire pros, but make the call yourself. If you can't explain it, don't own it. Practice losing safely. Paper trades. Small checks. Capped downside. Reflect, adjust, repeat. If you're ever in line for a windfall, or just trying to be the steady hand in your family, this is the real flex. Calm systems, boring habits, and a plan you can stick to in a storm. Because not blowing an inheritance isn't about being lucky. It's about being ready.